right, good afternoon, everybody. The noonday gun in Cape Town has just gone off. You probably heard it in the background there because our studio is in Cape Town. Thank you all for joining us and welcome to the REI Investment Webinar. And today is our second webinar. It's part of a two-part series alongside Opportunity Private Capital for 2022. For those of you who don't know me, my name is Neale Petersen. I'm the founder and editor-at-large of Real Estate Investor. And we've been serving investors, entrepreneurs, business and property professionals in the South African residential and commercial real estate industry for over 15 years already through our multiple content platforms, including Real Estate Investor Magazine, our digital mag and online content, our virtual conferences, our webinars, our videos, podcasts, and also in the metaverse. I'm really excited to be your host and moderator for this investment webinar today. And today's topic is, it's all around inflation, how to beat it, how to beat spiraling inflation through investing capital securely in the early stages of the property development cycles. We do know that a large proportion of our active investors invest in real estate first and foremost. I mean, real estate has proven itself many times before in market downturns, and when inflation skyrockets, real estate performs best as a power asset in your portfolio. Question is always, what asset class or category of real estate to invest in first, physical property or alternative investments? Other questions, where do you invest, locally, or more specifically, where do you invest locally? Niche or broad markets, and they all have their pros and cons for different types of investors under different circumstances. The key is, though, to take action when the opportunity presents itself. And today we will discuss some of these aspects and we invite you to participate in this discussion. So to introduce you to our panelists, we are joined today by Nick Morgan and Wynand Hayward. They're the founders of Opportunity Private Capital. And also for the first time, Deon van Rooyen. He's one of the independent trustees of the Noble Shield Security Trust, who are responsible for protecting investor interests in these investments offered by Opportunity Private Capital. And Deon has very kindly agreed to join us briefly for the initial Q&A session. So first of all, we're going to jump off to, I'm going to actually ask Deon. I mean, Deon, we've never had the pleasure of meeting you before. I mean, you're an independent trustee on the Noble Shield Security Trust, and they're tasked with looking after your interests of investors in these investments, and your main focus is on the financial side. Maybe just to start off, give us a brief background about yourself.
Good morning. Thank you very much, Neil, and thank you everybody for allowing me to be part of this webinar. Yes, I'm one of the background people that look after the investments of the Noble Shield Trust that very much linked into the product. My background is I'm a chartered accountant. I come from Price Waterhouse, and I went out into my own business, specializing in business rescue as a senior business rescue practitioner with SIPC and with National Treasury, and getting involved in various trusts and looking after trust funds. And that's why Nick and Wynand approached me to say, given my experience, wouldn't I want to help them protect the investors? Thanks.
Fantastic. Nice to have you on the show, Deon. And so Wynand, let's get to you. I mean, you guys have been around for over 16 years already. In fact, we've got very similar ages for real estate investors as well. We've also been around just almost 16 years. So, and you've been offering the same type of investments throughout this period of time. Do you want to maybe just tell us a little bit about that?
Yes, Neil, thanks a lot. Yeah, we started on this structure of ours, as you said, 16 years ago, and obviously, like with any structure and pioneering a new offering, there are constant changes involved in adjusting to the market and the demands of the industry. So initially we started off by offering high returns and obviously security. Subsequent to that, our philosophy hasn't changed. That's still the same. What we have ever done during this period in time on our structure is that we still offer the higher than average returns. We have, however, evolved our security offer to our investors to a next level. And I think to briefly touched on that is the last 8 years we've developed our structure in evolving the structure of security, which is something unique offered in the industry. So we're very excited about it, and it's been very well received in the last period of our tradings.
Fantastic. So Nick, I mean, you look at, the different types of investments and how you raise money, you look at institutional funding. I mean, surely, using bank money for property developments, is that not perhaps a cheaper option? You probably just have to unmute yourself there, Nick. Yeah. Thanks.
Yeah. Afternoon. Good to see you again. Thanks for having us on the platform. Neale, look, I mean, when it comes to bank financing versus this alternative kind of structure, I think it's people are generally drawn to comparing two things, and that's interest rates. But it's a lot more nuanced. It's a lot more complex than that. If you compare interest rates directly, then obviously bank financing or funding is a bit cheaper. But there's so many other factors involved. So I'd like to just unpack those quickly, which might, so I can elaborate. So firstly, when bank funding is involved, 80 to 100% of the units in a complex, depending on what the development is, need to be sold up front. And when that happens, this could take time. I mean, this could take 6 months, 9 months, 12 months, depending on the product. So what happens is, something with our structure, the development gets going immediately. So it's very far along the projects that we're involved in compared to a bank funding project. So of course you save on holding costs just for that fact alone. Secondly, with bank funding, you're compelled to sell most of your units up front. Now the problem with that is you lock those prices in. And if you finish the project 2 years later, you've sold prices at those initial costs. So the advantage to the projects that we invest in is that the sales are rolled out systematically throughout the course of the project. And the prices are raised as the market progresses during that time period. So the end revenue on the projects that we're involved in is so much higher, or potentially higher than bank-funded projects. And that makes a big difference to the end result. The other factors as well, with developments, you want to get going quickly, you want to buy a piece of land. This is a very maneuverable structure, so you can jump in really quickly. Another factor that I can just point out is with bank funding, you'd have to pay probably an admin fee or a facilitation fee or something to that effect. That's payable up front. You don't get to pay that down the line, and that's immediate cash flow for the development. So I think those are among the factors that make this structure equitable with bank funding, because there are a whole lot of other factors involved. Just another important note, and I know it doesn't really pertain to this question, but at the end of the sale of units in the projects and the transfer, that's when the investors receive their capital and returns. So the developments are not under pressure from a cash flow point of view during the period, because the interest is payable only at the end. So that obviously adds value to that as well.
Excellent. Nicely put. And I think, Dion, with your background as a chartered accountant, forensic must have been very interesting. I mean, I suppose you guys see, or you in particular, see things that others don't generally get to see from that perspective. Do you want to maybe elaborate a bit on that? Do you just unmute yourself there, Dion? You just have to unmute yourself.
Neale, can you hear me?
Yes, perfect.
Yes, Neale, thank you for the question. Yes, from our audit days, and I was seconded from time to time to the national prosecuting authorities to help them. You often deal with people that make promises to people on investments, take their money, and then they run. And when you meet these people, they always start off with their legal team, and then they always say they're not guilty. I don't know if you've heard of the catch squad that will come in at night, 11 o'clock, and pick you up and just give you a bit of a rattle in a cage till the next morning when your legal team can arrive and bail you out. Because a lot of these people think the authorities cannot touch them. And especially with Pricewaterhouse, we used to work, and they still do. I'm no longer with the firm. They used to work very close with these authorities. Yeah. So that's sometimes you rattle the cage of these people, and hopefully they never try and take investors' money again.
Okay, great. And I think that's so important to know that your money is secure as well. So
yeah.
So that's very important. So coming back to you, Wynand, just on returns, because I mean this is a big thing, because you know, how is it possible that investors can get strong fixed annual returns that make a real difference to investors today? I mean, you're saying that returns on capital from 14 to 18% has been achieved. I mean, my question is, you know, how is that achieved?
Neale, that's obviously a good question. I think one thing that we have in our advantage is that we've actually been doing this for years. So it's I think we can confirm that it's actually happening. I think to get directly to your question, the fundamentals are the same as with any typical project. And it boils down to the feasibilities that's offered on the project. So when a project's presented, we look at the feasibilities, whether the project will be able to afford, let's call it a more expensive finance model. And that's obviously a criteria that we go through. So in saying that, we obviously, our market segment of looking at projects is percentage-wise smaller. So, you know, we'll look at projects only feasible, and in a market there's then obviously less of them. The other side, which is Nick touched on it briefly, which helped a lot in our structure. He explained more or less how the market's, you know, a bit turned on its head with how we do it is because of our investors, we have the flexibility to act quicker on an opportunity. So, and it's exactly there where the difference comes in. So when an opportunity presents itself, we can say, look, we can act within the next couple of days or weeks, subject to obviously certain due diligence, because we have the funding available to execute on these projects. Now, the savings that's incorporated there then trickles through and assists in obviously offering these returns. Okay. And I think to give you just a brief example is when we went through the 2021 COVID scenario. I mean, it touched on all aspects of life and obviously on ours. So we were involved in a project that was held up, and the only thing that really happened there is that our interest expense, which was obviously allowed for in our feasibilities, was higher. But everybody that was involved in the project received their returns. The only difference was that the developer just made a lower return.
Okay, so I'm going to encourage the audience out there, if you've got any questions in the chat box below, there's also a Q&A box in either one. You can fire away with your questions. We'll deal with them at the end. And so that's very important. But yeah, I think, you know, 14 to 18%. Wow. I mean, you know, you can't get that everywhere. So let's talk a little bit, Nick, about location, because you've been more Cape focused and you strategically focused specifically in the Cape for a long time. And maybe you can just share what has prompted that decision to obviously be focused in Cape Town area.
Yeah, so we've been involved in projects for a number of years, quite a long time actually, in various other parts of the country. So if we're going back quite a long time now, so between 2006 to 2014, around there, involved in projects in Gauteng, KZN, et cetera. And we firsthand saw the degradation of municipalities, the infrastructure, the service one was getting from municipalities, etc. And I think there's a truism that says that investment or good investments are really reliant on good infrastructure. You know, the two go hand in hand. So in about 2014, we strategically saw what was happening in other parts of the country. We weren't stuck in the Cape Town bubble like you guys that thought that the whole world is just fine everywhere. And we managed to look at it and say, okay, guys, if things are going to go badly in South Africa, they're probably going to go badly in Cape Town last. So that really was our thinking. And I think we're probably one of the first people to have that thought process in mind, and we changed our strategy from that day onwards. So since sort of late 2014, we focused entirely on the Cape because of that, from an infrastructure point of view. And it looks like, Neale, I mean, I think we've been vindicated in that because the Cape has progressively become more and more popular as not just an investment destination, but also somewhere for people to live and move. So yeah, so that's really how that came about.
It's interesting because just on Monday night, I was listening to Alderman Andrews. He's our deputy mayor of Cape Town, and we look at the immigration numbers. I think our numbers, we just over about just under 5 million people. He projects 2027, 6 million. So we've seen a massive migration to the Cape. Very interesting. I mean, we've seen it from Gauteng, we've seen it from KZN. And so it sort of fits in with that, and there's a lot of activity, a lot of development activity in Cape Town. So it vindicates that. I think it fits in very nicely with that whole sort of strategic look. And then we need to accommodate all these people. You know, we need to accommodate them somewhere. So I think that. Do you want to comment on that?
Yeah, Neale, it's interesting because a few years ago it was kind of anecdotal. People would say, oh, it seems like lots of people are moving down to the Cape, or schools have got a lot of influx of Gauteng people applying for schools, etc. But now the thing is, it's not anecdotal anymore because the stats are starting to come out. And so one can actually see the data on properties being sold, people moving down, property prices moving up, and the volume of people. So it would have been an interesting talk to listen to, the one that you went to.
Yeah. No, look, it's an ongoing discussion, and it's something which I think, we've got a very motivated mayor and team. And, there are some, unfortunately, national government does control some aspects which holds them a little bit back, unfortunately. But, it's just one of those things, that we have. But certainly they're very motivated. We've actually got somebody now who, Rob McGaffin, has been appointed head of spatial planning for the whole of Western Cape. So it's quite exciting, and because it's a big job, and we've got to take obviously the past in there. So I think there's a lot of exciting things happening in Cape Town in the property development space. Okay, Dion, we're going to come back to you because this is quite important. I mean, you touched on the forensics and that kind of thing. And, a lot of people look at these investments and they say, is my money secure? And, that's so important. And it's clear you've got a lot of experience with this sort of thing. Do you feel that protocols have been set up on your side to give investors adequate protection?
Neale, can you hear me?
Yes.
Neale, I think coming on board with the investment and construction and planning group that we are talking about this morning, we had a long meeting going through all the tick boxes that we thought are very important to protect the investor, given my experience. And we basically have set up a very nice process in the trust to look after our investors. We meet monthly. We discuss the project. We don't just wait till it's finished built. We actually part of the monitoring team too, weekly, as the protectors of the funds of our investors. So I feel very comfortable now that we are running this in this manner. It was one of the requirements when I joined that I wanted that in place, given my background. I trust that helps, Neale.
Absolutely. Yeah, look, I think, it's important that, you're going to put your money in, and we say we're going to get that return. We're going to make sure we get it back. Because
Absolutely.
Unfortunately, there's just so many schemes out there, and, people always sort of draw up, it's a little bit of a question. I don't know if you want to comment on that because you've been involved in forensics.
No, I think, you know, you get these funny schemes of arrangements, and when you're actually in forensics and you go and try and find the people's money, you find a lot of these accounts don't exist. The whole structure is put in such a place that it actually disappears in a basket. When the people disappear or where the funds are abused, the nice thing that we've done here is we're dealing with reputable firms, reputable investment houses. So when the money is not needed, it's actually not even in one of the construction accounts. It's lying in a proper investment account that looks after the trust. So I sign off these transfers. So we don't just take somebody's funds and just go over to a construction company and leave it there. There's a proper drawdown facility. There's proper trustees that look at it. And as I said, we look every month at the situation of where's the cash that we actually have released. And where's this project going? Is it in line with what has been told to the investor? Those are checks that I think I've learned through life, that if these schemes of investments, if they don't have it, then it's quite clear it's going to go wrong.
Absolutely. So, Wynand, I'm going to come to you just on that security and protection of capital. I mean, how is the security for investors better than similar comparable investments out there?
Well, Neale, I'm not familiar with any product out there that offers this extent of security that we do. I'm just going to touch on briefly the comparison from when we started. So when we started, you had three parties involved in security. You had the developer involved, you had the financier involved, and then you had the investor involved. So there was a commercial pecking order in place, you know, with regards to security, should anything unforeseen happen. So what we've done is we've changed that whole pecking order for our investors, and what that means is that when a project is presented, all the funds are raised for the project. So the only parties involved in the actual development and the funding thereof are the investors. So with that new structure, what that affords the investors, and from opportunities point of view, and then the trust, which I'll touch on now, is that the asset which are being developed is then the security offered to the investors. So that's the difference, that the main shift that we've done the last 8 years is that the investors have now moved, if I can call it that, to the top of the pecking order should anything happen in the project. And I think, just to add on to what Dion started discussing, is that there is a process in place that guides the project from a financial point of view. So the security trust, Noble Shield Security Trust, which Dion is an independent trustee on, they are in control of the funds. So just in brief, like any project, before any funds flow into the project, it has to be signed off by the trust. The trust has to consent that the draws are in place and the funds can flow. Similarly, at the end of the project, if any assets or properties are transferred, then the trust must also consent to that. So what we always find interesting is that when people engage and investigate investment opportunities, is they don't often ask about the security. We've actually found that. And if we look at through what's happening throughout the market, then we always ask the question, did the people, you know, raise any question? Is there some sort of security or any?
And why do you think that is, Wynand? For what reason?
Well, that's an interesting thing. There's this what they call myopic loss aversion, and that is where the individual, I think you're familiar with it, is where individuals are significantly more scared of losing money than gaining money. But it's a bit of an irony if you look at what's actually happening in the market, because you know, you see what's going on. So from our side is we actually made the structure simple, is that the asset is always under control of the trust until all the investors are repaid. So there's obviously a process which Dion and myself just briefly touched on. So that's one of the core aspects of the structure.
Okay, excellent. Okay, Nick, so to you, I know we spoke about the whole Cape focus and that kind of stuff. And so maybe you can just elaborate on, but probably dig a little bit deeper into, what areas are you investing in? And maybe, elaborate on, the benefits of investing in these high demand areas.
I think part of the answer might be in the question, Neale, that they're high demand areas.
Yeah.
But look, the bottom line is, I'll take you back 2008, 2009. We all remember that, I think, and we were involved in projects then. Everyone saw the collapse of the real estate industry to a certain extent, but we saw firsthand how middle income residential property was very resilient to that, from a point of view that people still needed a place to live. So rentals were full, the properties we were involved with, tenancy was full, etc., etc. So we saw firsthand how resilient that market was, and that's what prompted the strategic focus going forward to deal in middle income sectors where people have to live. Not a nice to have, not a seaside property, etc., not on a golf course, but you have to live because the schools are there, it's close to work, amenities, hospitals, shopping centers, etc. So we've stuck to the last 8 years or so, quite call it an unsexy model, where it's units that people need to live in. And we've stuck to that. So anything between 1 and 2 million range, that's been the focus point of the developments that we've offered the investments in, and that is the best sector at the moment to be in. We're in good areas of Cape Town, which we spoke about Cape Town being a good destination anyway for property sales and investments. But we've been in the very growth points within Cape Town. We've been in the Blouberg Parklands area. We've done a number of projects there. We're currently in the northern suburbs of Cape Town near Durbanville, so out that way. And these are resilient areas where rental vacancy rates are low, property sales are still consistent, and again, average price around about that 1.5 million mark.
Okay, great. Quite a frightening statistic I heard also this week from Alderman Andrews. He said that in the Western Cape, just in income levels have actually come down, per capita. And he said 72% of the people that live in the Western Cape earn 15,000 Rand or less, which leaves us with anybody on that's 28% that's left that earns more than 15,000 Rand a month, which is a bit of a frightening, crazy statistic for those that are looking at real estate, because I think with FLIS models, you just sort of qualify for that one. However, it is absolutely the sweet spot, and it is definitely the area, I believe. So I don't know if you just got any thoughts around that.
Well, Neale, the thing is this is, look, we're not quite in that range of projects, 15,000 Rand and less, you won't be able to purchase for over 1 million, but we're still in that glut of properties that are in the highly absorbable range. And the reason, and that's borne out by data as well. You probably find that most of the rest of the 28% is between the 1 and 2 million mark, and you probably got maybe 5% above that, but I don't know the exact stat. So it's a healthy quantum of properties in that sector. And the other thing that works nicely, of course, is that it's quite a fast moving sector. So because sales are quite consistent, the projects are in and out quicker, that lessens risk for the developments and as well as the investors involved as well.
Okay. Just to our audience, once again, please fire away with the questions. I see a couple of questions have come through, but please just pose in the Q&A box or in the chat box below. We will deal with it at the end of the webinar. And I know Dion is not hanging around with us. He's a busy man. He's a compliance guy, so he makes sure that he's obviously very busy. But so Dion, do you have any vested interest in the development projects or any of the companies involved here? You probably want to unmute yourself first.
No, Neale, I've got no vested interest. I prefer being independent. If it had to come down the way, I will surely build bridges to prevent that. But if you ask me, would I invest in the project myself, my own funds? Yes, definitely I would if I felt that is the way I wanted to invest. So I have no issue of investing myself in the products, but at the end of the day, I try and remain neutral, because I think when you're neutral, you act neutral, and then you call the shots. And when I accepted to look after the trust, I indicated it will be on the same way as when I used to be doing business rescue operations. I take over the company, I get rid of the directors, and I take over the funds, and I work with my shareholders. And I think that's what I'm doing here with the investors. I'm like their little rescue officer, but I'm not rescuing.
Excellent. Great. So Deon, maybe just give us your parting shots, because you're going to leave us now, because I understand you're going to have to go. Do you want to maybe just give your final thoughts around this investment, just per se? I mean, you've added some real valuable input, certainly from forensics and compliance protection for the investor, etc. So do maybe just your final thoughts just before you depart.
Yeah, no, thank you, Neale, and thank you for asking me to come onto the show. It's the first time we are meeting you, and I know some investors wanted to meet me. I often get a phone call from an investor where they speak to me and they just want the comfort. Are you real? Do you exist? Is your number real? So from my side, as Wynand and Nick said, I think what helps a lot for any investor is how long have you been in this game, and how long has your company's operated? It's like if I asked you to put R1 million on call with Joseph Bank that started yesterday, you're going to say, sorry, I'd rather put R1 million on call with FNB, because FNB is something that I'm used to. I see it in the pictures, and it's the same like putting fuel in your car. Would you put fuel in from a garage? You don't know the brand at all. You don't know where it's garbage. So yeah, and thank you very much, Neale. My side, the company has got a history. The Wynand and Nick has been quite involved in the past, and there's no reason for me to panic. And I think it's very good, and I keep on supporting them. And may we, in 10 years' time, when we speak to you again, may most of our investors be very happy as they are at the moment.
Fantastic. Deon van Rooyen, thank you very much for joining us today. Yeah, we hopefully see you on one of our events in the future. Thank you very much for your valuable input. And I think you put a lot of perspective over there. And I think you put a lot of investors' fears at rest. They can sleep well at night.
I really hope so, Neale. Thank you very much. Thank you to the investors listening and allowing me to be part of the webinar, and goodbye to everybody.
Absolute pleasure. Thank you, Deon. All right, so let's just move on. We're gonna have a short collage video presentation, and I'm going to hand over to Nick, who just wants to show a quick collage and video and a word from some of his investors.
Neale, yeah, just a change of pace, because we've been chatting for about half an hour or so. So I thought it'd be nice to show a little collage of videos from some of the guys who we've chatted to, who've been invested in the projects. So bear with me as I manage technology in this segment. What made you gravitate towards us?
It's a good question. I think the key thing for me, when we met, you'd already been in business a few years, and you had a track record. You'd already delivered several successful projects with consistently high returns, and that gave me a lot of confidence. And when you look at the projects that you had exited, the returns were there, the proof was there, so it made it quite risk-free. You had done what you said you could do. Right. You had evidence of it, and obviously you gained the experience and the track record, so that gave me a lot of confidence.
So I've always been looking for other ways to do better with my money and make it work better. And that's when I was introduced to you and your company. And after we sat down, to me, it's a no-brainer. It's an absolute no-brainer to invest in something that is more tangible when I'm invested in one of your developments, I can physically get in my car, because I'm in Cape Town, and I can drive to it, I can see it.
If I can just summarize, you're looking for good returns that are above average, but you're also looking for security and safety within your investments.
I think that the balance of risk and reward that opportunity offer is unsurpassed. I think that you are, the investor is actually on the good side of that balance, whereas in alternative investments, I think the investor is on the wrong side of that scale.
Personally, investing is not something I know, and I think you invest with people that you do know,
Right.
and that you trust.
Right.
And I trust you guys, so it's been an easy ride for me, because the trust is there. The numbers and the way you do it still confuses me, to be honest, but it doesn't matter because I trust the way you guys operate. And 6 years later, you haven't let me down, so wow.
Look at that. Okay.
Thanks, Neale.
Right. Are you going to share your presentation now with us? So you've got a PowerPoint.
Yeah, have we got time for it?
Yes, I think just briefly take us through before we get to our questions, because there are some Q&A, there is time. So I think let's maybe get into that right now.
Okay, so I'll try and whittle through it quite quickly, Neale, given the time constraints. See that?
Perfect.
Okay. All right. So as I said, I'll try and whittle through this quite quickly. So as we've all found out by now, Opportunity Private Capital was founded in 2006. We located in Belleville, in Edward Street, and have been since that date. So we're quite long-standing in the area. And the current structure of investment offerings has been going for about 8 years. The current structure with the fixed returns, etc., etc. What we do, as we've found out by now, we offer these secure or protected investments for private investors to earn pretty decent fixed returns on their capital, and that's by investing in residential developments. And as we know, they're in the Cape Town area. A quick comment on who this suits. Well, a lot of people are interested in real estate. They want to invest in real estate. They like the tangibility of real estate, but they don't always want the hassles that are associated with the management of direct property ownership. So this very neatly falls into a category that befits investors with that appetite. So far to date, I think it's important to elaborate on a track record. So in terms of private capital invested, we're looking at just under 270 million to date, with a total project value of just over $500 million, and that's growing every year. And just as a matter of interest, the last 5 years average returns have been 16.75% as annual returns to investors. It's pretty consistent.
Yeah.
Just a quick word on strategy. Fixed returns per annum on capital. The reason Wynand elaborated earlier about the fact that investors receive the development assets as security to protect their capital. They were first in the pecking order. So therefore, it could be structured with fixed returns per annum, and that gives investors a degree of predictability about how their investments will perform. It also gives the development company a decent foothold as to how what level of funding and how that's going to affect the project. Secondly, investors have obviously the security to protect the capital, and the development assets are held as security for their protection until they're repaid, it has to be said. The level of retention among clients is around about 80% at the moment, and I think that's just because of the consistency that's been afforded investors. Just to continue on the strategy, as we've alluded to already, we focused on investments in the greater Cape Town region, high demand middle income sectors, which we spoke about earlier, and they're all small to medium sized gated complexes. So the projects don't run for multiple or too many years. Otherwise, that would obviously impact you from a risk point of view. just looking at some of the benefits of the investors, or cornerstones, as we like to look at it. Obviously, the property-backed capital protection is paramount, and that's the entire premise of the structures based upon that protection of investor capital. Consistent fixed annual returns. We spoke about the predictability. Something that's quite nice to consider as well is a short to medium term investment period. So our average over the last 8 years, the average investment period is just over 15 months. So investors aren't tied in for particularly long periods in these investments, which is I suppose good for their planning, which gives some predictability with how their investments will perform. Very important for investors to understand, and I think Vainant alluded to this in terms of how the 14 to 18% returns are achieved, is investors get early access to the development value chain. So that's really where a lot of the value is unlocked, which can now be passed on to the investors. So that's important. And then what has been done is the structure is actually really simple. So the mechanisms of how returns are generated are really clearly defined. And I think there's an old adage that says, if you can't understand what you're investing in, then don't invest. And I think this is one of those investments. It's pretty easy to understand, and I think that gives investors a great deal of comfort. A quick word on the flow of funds. I'll just summarize this. So the first thing is obviously the investors are linked to a particular unit in the development as part of the additional security. Funds are paid into the attorney's trust account. The attorneys then place the funds in an investment holding account until it's drawn down, as Dion mentioned earlier, with those checks and balances. And in this holding account, currently, the rate to investors accrues at 9% per annum. It's linked to the bank repo rate, so it fluctuates accordingly. And once drawn into the project, then the rate of return shoots up to 14 to 18% per annum. And when the linked unit is sold and on transfer to the end buyer, the attorneys then pay out the investor proceeds. And then finally, Neale, just a quick comment on the current investments and projects that investors are involved in. The first one is in Delini, that's in the suburb of Brackenfell, in the northern suburbs of Cape Town. 61 sectional title apartments, all 2 bedrooms. Project's actually nearing completion. All investment cycles are closed. It's been fully subscribed to the tune of just under 61 million. And at this stage, the first and second cycle investors have successfully exited to the value of just over 33 million. And the next couple of cycles will exit over the course of the next 6 months. That just gives you a bit of a visual take on the progression of the project from start to finish. Nice area, very close to Harzendal wine farm, which is literally a minute away. The second project involved with is the Heron Fields development. This is in Langeberg Ridge, adjacent to Durbanville, 59 apartments. The first phase has been completed, and the first residents will be moving in the next couple of weeks, with the second phase to be completed early next year. So far, just over 50 million in total investments, and the first cycle of investors will be exiting their investments in November and December, and that's to the tune of just under 33 million, I think 32.8 million. And there is another bird's eye view of just the progression of the project from start to finish. And then finally, the current available investment is the Heron View development, also in Langeberg Ridge. It's actually adjacent to the Heron Fields development, 166 units, 2-bedroom apartments, all of them. And these investments range from 14 to 18% per annum, depending on your quantum of investment. Minimum investment for this is 100,000 Rand, and the estimated length of investment is around 18 months, but it's not an exact science naturally, because these are residential projects, and the time varies slightly. And just some visuals. It's actually a stunning site. It's an elevated site. It's between Durbanville and the Cape Gate shopping centre. It's got a lot of the units will have wonderful views over the mountains in the background. So really good project. Investors are going to do well out of this as well. And that's it.
Excellent.
Neale,
Great.
That ends it. Just I hope that was quick enough.
Thank you very much. No, it was perfect. You've left enough time to obviously deal with the questions, and there have been some really good questions here. So for those who are interested, there is a link it's put in the box there for Heron View. If you've got inquiries, just click on that and you can just put your name and your details in there. And one of the investment advisors from Opportunity will contact you. So if you are really interested, you would like a consultation, please, I advise you just to click on the capital investments link. It's in the box. And then secondly, we can also arrange a viewing in the metaverse. So, and that's a personal, and I've also put a link there. If you would like to meet a consultant in that room, you can view in your own time. You can actually go and view the investment in the metaverse. And I know we had our first event in the metaverse, Nick, and I know from a personal consultation or a personal, if an individual wants to go in there and view within their own time, 365 days a year, 24/7, you can go in that space. You can see the videos, you can see the interviews, you can see the webinars. There is a mountain of information. And if you want to go in with a consultant to take you through from, or for an investment advisor from Opportunity, you can arrange that as well. Okay, so let's get to the Q&A. So I don't know who's going to do that. Who's the tax guy? Because I think Dion was the tax guy and he disappeared. So, but I'm sure you would be able to handle that, either you, Nick, or Wynand. And it's how are the returns taxed?
I can tackle that, Neale.
Okay.
This is interest on a loan, but quite fundamentally, and this is really important for investors to understand, is the interest is calculated on a daily basis, but you're only deemed to have earned that interest when you exit. So in other words, when the property that you're linked to has been sold and transferred. So from a tax point of view, that's when you'd submit your return, is in your exit year, not if your investment year falls over your year end. If you haven't exited, then it does not have to be declared at that stage. But it's interest on the loan, to answer that question, and you'll be taxed at your usual tax rate.
Okay, excellent. Do you want to handle this one, Wynand? Do we get monthly statements on the investment? Because people like to know where's my money? Is it growing, and how does that work?
Neale, yes. So how it works with our investors, they've got access to our portal where their information is, and they can access this obviously with username and password, and then their statement is available there, and that's obviously then updated on a monthly basis.
Okay, fantastic. I think this one, we've had this question before, Nick, and what happens if units are unsold at the end of the development? Do you want to maybe explain? I think you did touch on that slightly in the presentation already, but maybe you want to just tackle that one directly again.
Neale, sorry, what was that? If units are?
What happens if units are
unsold
unsold at the end of the...
Got it. So look, it's highly important for the developer or the development company to have those units all sold, because if there are a few units that aren't sold, let's say there are 5 units that haven't been sold by the time the project is completed, what happens is the investors linked to those units are then, their interest keeps on calculating. So the longer those units don't get sold, the higher the finance or the finance costs and the interest payments that the development company is going to have to pay. So it's highly important for them or the development company to think of strategies or ways in order to move those units in order to exit the investor. So we haven't yet been in that situation. So, and hopefully if Cape Town keeps on its upward trajectory, we won't see ourselves in that situation in the near future.
Okay. And Wynand,
Neale?
I'm just gonna, yes.
I think maybe just to add on to what Nick said, and I think that's maybe
Sure.
where the question was getting, is if the scenario presents itself where it didn't sell, because as Nick mentioned, we've been fortunate at the moment that that's not been the case, but just to entertain that scenario. So typically what would happen is we, as Nick said, our average exit on these transactions is close to 15 months on average. So what typically happens is there's enough surplus in the transaction to carry, let's call it the vacant property, and sell it in the remainder of the 6 months for that matter. That's part of the question. So we can entertain it and say what happens if it doesn't sell after that. So you can literally go and entertain a worst case scenario. And I don't know whether that's maybe where the question's going. But if you entertain a worst case scenario, the investor will still have the security of the asset. The investor will still have the income of the asset. But then you move into a scenario where the investor can approach the trust and say, look, guys, what is our options here? But I mean, we've never been there. But if you really want to entertain a worst case scenario.
Okay. So there is a question aligned to that one, which says, is an investment based on a particular unit or the whole development? And I just thought we'd tackle that alongside. So is an investment based on a particular unit or the entire development?
So in short, how it works is the direct answer is it's linked to a unit. So when the investor signs an agreement, an investment agreement, it specifies the unit, let's say A101. So nothing happens to A101 unless there's consent from the trust. And whatever happens with that unit, let's call it from transfer, is then the repayment thereof goes to the linked investor. So they are linked to specific units.
Right, excellent. Okay, so Dion did share this one, and he did sort of highlight I mean, he's the protection guy, he's the obviously chartered accountant. He shared also some of the forensics, but there is a question, can you also please share any risks? Because people are starting to say, well, what could go wrong? What could go wrong, Nick and Wynand? And so far so good. You've had a great track record, but people always do focus on that side. I think you mentioned it earlier, Wynand, where you don't get too many of those inquiries. But in fact, there is a question there. Can you share any of those risks?
So
Nick,
I'll jump in there if you want. And then Wynand can also, he'll have a couple of comments as well. He likes to have the last word. So Neale, look, we're very transparent about the fact that the biggest risk to investors is a liquidity risk. What I mean by that is once the investment's been made, that's it. You're in there. You're in the cycle until the end when the property gets sold and a transfer. So that's important for investors to understand. This shouldn't be emergency money that you need to tap into, because you can't approach us halfway through and say, please, can I have my money back? Because it's not possible until the unit has been sold and transferred. So liquidity risk is the biggest risk. Then you get other risks, of course, and we can unpack those. So you get risks that was, I think the question's been answered about if the properties don't get sold. But I think Wynand has covered that. I don't know if he wants to elaborate, but he's covered that. Other risks come with, you hear these stories about investors pay funds to these projects and then the project doesn't go ahead and investors lose their money. Well, with these projects, that can't happen. The funds stay in the attorney's trust account or the investment holding account until such time as the project starts and the security is in place. So the funds do not get used until the project is a green for go. And that's really important, because I think property investment gets tarred with a bad brush, if you want to call it that, because some of these things happen, but it's because the proper protocols and security processes are not being followed, and then people lose their money. So it's very important, and Wynand has gone on about this, is check what security you have for your investment, because that's actually where the premise of an entire investment lies. The other risks are possibly in construction with external parties. Fortunately, there's an affiliate construction company with us, and so it's closely managed so that you don't have that risk of a external construction company going bankrupt and then putting the project at risk. So those are some of the ones that come to mind, Neil. And again, just to finish off, it's why we tend to focus on these high demand middle income areas in Cape Town, because generally speaking, even if other parts of the country are performing quite poorly, these still seem to stand up okay and keep on trucking along.
Okay, excellent. Right, there were two questions, but I think we actually
Bernard, anything you want to add there?
Yeah. Neale, just briefly, and it sort of touched on with that myopic discussion that we've had, just laughed about earlier, is that typically when an investor, does an investment and it goes north of, at the current environment, 14%, I think there's almost a subconscious acceptance that, I might lose all my money because it's a high risk that I'm entering. It's always high risk, high return, that sort of thing that's been going around for ages. So from a risk point in our structure is any money that's been spent has been spent on something. So if you entertain a worst case scenario and you stop the project right in the middle, for that matter, that's not worst case scenario. There's an asset there which has been paid for. So the investors will never be in a situation where they drive to a site and they find that there's not even a site there because of the checks and balances. So it's a whole different approach from high risk, high return scenario. That's why we're trying to bring these, we are bringing these two together, that there's always something tangible that is available for the investors. Now, risks, there's a sea of risks involved in anything, but we minimize all those risks. I don't know if that adds to it, but we're open to have a discussion purely just on risk, if that's ever required.
Yeah. And I think Dion actually, he put a lot of emphasis on the whole protection mechanisms for investors and that kind of thing. So that was quite an important part of the discussion. Okay, we are running out of time. And what I'm going to do, because there are questions which I think you've covered already, but the one was pertaining to, does this mean we only get the money back when the properties are sold or exactly after the 18 months term? Or is an investment based on we've touched that one, and are the funds utilized to fund the development, and what happens if the development construction company is experiencing cash flow problems and cannot complete? You've just actually pretty much dealt with that one. What I'm going to suggest to the people that do have more specific questions around that is to, arrange a meeting with the consultants. There's a link, as I mentioned over there, which is on the page. Just click on the link and set it up, and you can ask very specific questions. What I'm going to ask Nick and Wynand to do is to give your minute and a half final wrap to end this webinar. So maybe starting with you, Wynand, or does Wynand like the last say? You say, Nick, or would you like to have the last say?
Generally. No, I'm kidding. No, I'm just teasing. We're an equal opportunity last comment environment.
Okay, great.
Problem is, Neale, if Nick goes first, there's nothing left for me to say.
Okay, well, I'll let you guys battle it out. So, Nick, should we go with you first?
Yeah, look, Neale, I think we've said it before. There are a few things I want to say. One is this: is that people tend to look at South Africa as a whole as an investment destination, and they don't like it. They're seeing all the bad stuff that happens. But I think within certain segments of the country, and the Cape Town particularly, there are little nuggets of niche areas to invest in, and I'd like to think we've captured one of those nuggets. So people should actually dig a bit deeper when they're investing. I think the time has gone to just blanket an investment decision based upon macroeconomic variables. I think you need to look at the micro picture as well. And then that's the first thing. The second thing I'd like to say is that, and it's again on security, is that we really compel people, if it doesn't matter what investment you decide to enter into. It doesn't matter if you're investing with us, it doesn't matter if you're investing with someone else, whatever the case. Just check that you have security and adequate protection for your capital, because the entire premise of this structure is based on that. And that's probably the best advice we can give people. That's our opinion on that.
Great.
And then lastly, Neale, thank you very much for having us.
No, pleasure.
On your show. It's been good to see you again, and we'll see you again soon.
Absolutely. And on that note, you have the last say.
Oh, Neale, thank you. Yeah, Neale, thanks. I'll start off. Thanks a lot for your show, and thanks for your time, and for the investors that logged in. Just from my side is we've been at this for some time now, and it's been a learning school to get the offering to where it is at the moment, and we have comfort in it going ahead. And it's, in my opinion, we've now reached that point where, and we can see it in our investors and our rollovers, where there's a slow snowball starting to turn. If you just look where we started 8 years ago with this model, because this is a more difficult model than just running off to the bank and getting lower interest. So we're creating this relationship with our investors, and as Nick mentioned, we've got about an 80% retention rate. So I'm excited about where this is going, and the fundamental basis of our whole business is our investors. That's why we're comfortable in offering them the security in the assets and building this with our investors. So from my point of view, I'm excited where this is going. So thank you again.
No, thank you. And I think, yeah, those kind of returns, I mean, this makes people definitely look up. So both Nick Morgan and Wynand Hayward, and of course, Deon van Rooyen, thank you very much for participating. And to you, the audience, thank you for being so patient. Thank you for all your questions. We hope you got value and you got return, most importantly, from this investment webinar. I encourage you to engage with Nick, Wynand, and Deon. For those of you that would like to be contacted, please let us, please reach out to us, or there is a link which I did send. You can resend again, and just ask my colleague to just send that out, or arrange a meeting in their metaverse. You can get on that link with one of the investment consultants, or go by yourself and view the different investments. There's lots of videos, and it's quite an incredible experience to move around that. So before you go, I need to give you some important dates. Next week, there's a not to be missed webinar. It's next Wednesday on the 9th of November. That's going to be at 11 o'clock to 12:30. And it's going to be on the 4 important lessons learned from the wealthiest investors from investing in uncertain times. So thank you all once again for joining us. I'd like to end off on an inspirational quote, one by Robert Kiyosaki, that said, "History reminds us that dictators and despots arise during times of severe economic crisis." And it was the philosopher Plato that said, "So stay positive, better days are on their way." So on that note, this is Neale Petersen of Real Estate Investor signing out. Stay safe, everybody, and successful investing. And until next week, we'll see you then. Thank you once again, Nick and Wynand, and the opportunity by the Capital team. Thank you again.
Thanks, guys.
Thank you, everybody.
Thank you.